Hey everyone, and thanks for jumping back into the cryptoverse. This is your Tuesday update premium video. Hopefully, you enjoy the content. In this video, we're going to be talking about a number of things. I'd like for these videos to have a more broader view of the markets than only ever talking about cryptocurrency. I think cryptocurrency will always remain the primary focus, but I would be remiss to not mention other strategies for diversification. So we will try to include that in a lot of these videos. So in the first part of this video, we're just going to briefly touch base coming off the last video. We're going to talk about the strategy that we've been employing for the last few months. We're going to take our stroll through the cryptoverse. Then we're going to go look at some of the precious metals. And then at the end, I'm going to try to talk about some of the goals for the website and ultimately what I ultimately see it becoming. So in the last, really over the last 3 months, as you guys know, is since Bitcoin, basically since Bitcoin closed below its bull market support band in November. Okay, so let's go in late November, and especially getting into early December. One of the things I've said for a number of months now is that hedging through stacking cash and through precious metals or commodities in general. And I want to reiterate that I do think that continues to be the best strategy. Now, I know it can easily. A lot of people might hear that and they say, Ben's just being too bearish. It makes more sense. You might think that you're still better off just putting all your money into altcoins right now. And look, there's always a chance you're right. But I also want you to consider the downside risk here. And one more thing with regards to this. I mean, I understand I can sound like a broken record with the downside risk and diversification. But what I've seen in the chat room are a lot of people are still throwing a lot of money into altcoins because they're looking at Bitcoin and say, well, technically Bitcoin is putting in a higher low, so therefore there's no reason to really get too worried at this point. And you're right. I mean, we are putting in higher lows so far, but the problem is that if you don't get your portfolio to the point where you're okay stomaching the downside risk in the event that Bitcoin puts in a lower low, then you're not really setting your future self up. I think diversification is a key thing to consider, and I don't say that lightly. I don't just say it as something that Ben's just being too bearish, and this is a way of sort of looking elsewhere. No, I do think you need to be diversified because I know how these markets can get. I've seen it many times before, and when you have the stock market just continuing to put in lower prices, and the same thing with the Nasdaq. Bitcoin's more or less just following the same trend line, the same trend in general. I mean. And so the idea that continuing to just put all your money into altcoins during this type of a time doesn't really make a whole lot of sense in my opinion. Okay, I'm not saying they can't do well. It's just that the market still remains risk off, and we need to understand this. So this is why a few months ago we pivoted the strategy to say, look, you need to stack cash. If you want to hedge with some other asset class like precious metals or commodities in general, that's fine, right? That's a fine strategy. And one of the things I wanted to talk about is that I understand that some of this stuff can get somewhat repetitive, and I understand that a lot of people want something new, something tangible to hold on to, and I'm trying to provide that through saying, hey, look, precious metals are doing very well right now, but I do know there are a lot of people that don't really have that much interest in that asset class, because it doesn't really move that much, right? You're not going to see crazy gains in precious metals. One of the interesting things is that earlier today, you know, Bitcoin, I mean, Bitcoin's only up at 1% now today, but earlier today, Bitcoin was up about 2.5%. Gold was up 2.5%. Everyone's super bullish on gold because it's up 2.5%, and everyone's super bearish on Bitcoin because it's only up 2.5%. So there definitely is some type of thing, I think, where crypto investors sort of become somewhat disillusioned with longer term plays. And I'm not trying to say that you're going to get rich by investing in precious metals. I don't think that's the case. The point is to say that stacking cash in general or diversification into precious metals, they can help preserve your wealth until we get back to risk on. Okay, that is the point. It's not to say that this is going to make you rich, because I don't really think it will. What I am trying to say is that, having some of your portfolio in something that typically performs very, very well during a risk off environment, is not a bad way to go. Okay, I mean, even if you put some money into stacking cash, into precious metals, and they only go up 5% over the next year, or 10% over the next year, or even if they lose 5% over the next year, there's always a possibility that the stock market performs worse than that in the short term. So try to be diversified. Try to take these things to heart. I know a lot of people aren't really here for the precious metals, or not really here for the stocks either. But at the end of the day, I do think what is best for everyone is to have a more broader view of the markets. And it's hard to provide that if we only ever talk about crypto. And the problem is, if we only ever talk about crypto, how many times can I say? I mean, this is now 3 months now where I just keep saying stay away from altcoins, stack cash, diversify into other asset classes. We have to be able to expand, right? We have to be able to expand to other things. Otherwise, it's just the same thing, right? It's the same thing over and over. At least if we expand, it gives us more stuff to talk about. So hopefully got that out of the way. Coming off the last video when we were talking about using just in general commodities as a hedge. I mean, gold was at like 2K or something, 1990. You can see it this week, it's already up to 2,052. So it's already up a substantial amount this week alone. It's up about 7.5%. So I mean, from 1911, not from that video, but it's up about $50, $60. And I want to, remind you that these assets can do very well during these risk off times. So we're going to come back to this later, because I know not everyone wants to listen to me talk about precious metals. So we're going to circle back to that after we talk about crypto, and then I'm going to talk somewhat candidly about the markets and then the future of the website. Okay. So the first thing here, and we've added a couple new charts. So one of the new charts is the realized market cap to thermocap ratio. I'll let you read the definition. It's pretty long, but it's basically regards to the miner revenue and whatnot. So if you looked at the realized market cap divided by the thermocap, this is what you get. Coincidentally, this is the only cycle so far that we have not yet put in a all-time high, which is kind of interesting. It perhaps, I mean, maybe it's some inclination that we still have some more juice. But I'm not trying to say that. I'm not just trying to like inject hopium, right? I do think the markets remain risk off right now, and that we could always trend higher. Even in 2013, it was looking pretty doom and gloom for a while, and then we shot up. But right now the market is risk off. I think it's more likely that we are, either bearish or neutral at best. But I said 3 months ago that Q1 is going to either be bearish or neutral at best. And here we are in March, and it seems like that's more or less playing out. I don't really see us going to like 50K or something in the next 3 weeks. So we've added this metric. Note we've added it. You can actually go view it for different cryptocurrencies as well. And so just keep that in mind. You can see you have it for Litecoin too. And Dogecoin, but I mean, I don't own Litecoin or Dogecoin. It's just there for people who do own them and would find value in the chart. Okay, so we've added this one, so we'll add it to our toolkit. We've also looked at the running ROI, and we've added it for a lot of different assets. Okay, so you can see we have it for Ethereum. We have it for, you can scroll down. There's so many different cryptocurrencies now that you can look at. And you can look at the running 1-year ROI. You can look at, say, like the 90-day ROI. You can look at the 4-year ROI. You can look at a lot of different things. Okay, we even have it for the total crypto market cap as well. We also have updated the corridor that we use. We've provided the bounds up here so that you don't have to get over here and zoom in and see what they are. We've provided the bounds on it. So far, it's done a relatively decent job. I mean, I understand that I created this indicator as a joke, but with that said, it's actually performed better than a lot of the other indicators, so might as well keep on looking at it. And right now it says the lower bound is at 31K. Now it can go down. Again, it's a function of the 20-week SMA. So if the 20-week SMA is in a downtrend, we know that this metric can go down like we've seen before, like in second half of 2019, like in 2018, like in 2014, like in 2011 and early 2012. So we understand that it can go down. But what it does show is that it shows instantaneously, what is theoretically possible based on this indicator. And it says that 31K is possible to the downside, and it says 115K is possible to the upside. Obviously, we're not getting super optimistic about the upside at this current moment in time, but that is where this currently ranges from. Okay. And we've added a lot of other new charts as well over the last couple of weeks. We've added like gas statistics. I don't really think I've spoken about that one on here on the premium channel, but or at least on the videos. But you can access this now. We have transfer volume as well for a lot of different cryptocurrencies. Okay. And again, if you want to figure out what's new, just go over here and you can pretty quickly see what are the new charts. Like here's the free float network value to transaction signal. Here's the network value to transaction signal. Address count changes. All these things are new, and hopefully supply burnt as well. That's relatively new. So we've added a lot of new stuff. And ultimately, we are just going to keep building. We have a lot of people working on this actually, and we want to just make it as useful as possible. So if we take a quick tour of the cryptoverse, Bitcoin's risk right now is 0.335. Okay, so if we go look at the chart, you can see we still remain in the light blue area. This is where we have historically spent most of our time, is in the 0.3 to 0.4 risk band. We spent over 1,000 days between the 0.3 to 0.4 risk band. This market cycle, we have spent more time in the 0.4 to 0.5 risk band so far. Right now we're here, okay? And I'll tell you, if we come back down to these lower risk bands, which is a possibility, even if you don't want it to be a possibility, it is a possibility. If we come back down to these levels, I mean, imagine how you feel now and how bad the market is and how you really don't even like looking at the price charts anymore to some degree. Imagine how you could feel if we come back down to these levels. Okay, this is why so many people miss crazy opportunities in the crypto market, is because by the time it gets down here, whenever it happens, whether it goes down there over the next few months or whether we kick back up to the higher risk bands and then go down there in a couple years, it's kind of irrelevant, right? At some point in the future, we will be at the 0.3 to 0.4 risk band, and it'll feel like it's really bad because we were just at the 0.9 risk band, a year before, and it could then come back down to the lower risk bands. If it happens, you should recognize that is the crazy opportunities that hardly ever present themselves in crypto. Don't know if it's going to happen, okay? In 2013, it didn't, right? We came down to these levels, and then we ultimately bounced right back up. So anyone who was warning of the downside risk over here was probably sort of trolled somewhat on this second rally that came after it. But listen, you always have to consider it. You always have to consider the downside risk, and you're not doing yourselves any favors by not doing so. So remember, one of the things that we've talked about are strategies for DCAing into the market, and one of them is dynamic DCA according to the risk levels. But what I find is that it's hard to implement that unless you have some type of more focused strategy. And that's why over the last 3 months, I've said stack cash. Because if I only ever say buy Bitcoin and nothing else, then you don't actually have the extra money to put in more money at lower risk bands. So that's the reason why I keep saying stack cash. It's because if we go to these lower risk bands, which is a possibility given the risk-off environment that we're currently in, then I want you to be able to have the money to put in at these lower risk bands. Because one of the things I found in the past is that when I didn't plan for it, I did not have the money for it. Okay? So like in 2013, I held through this entire thing and then I watched it come crashing back down. I didn't have a whole lot of money to put in over here because I'd already put it all in. Over here, I actually took a lot of profits during the 2017 mania phase, but then I started buying back in at around 6K. And then what happened, right? The floor fell out. But I was smart in the sense that I put some money in here, but I didn't put everything in, right? That's the thing. I put some in because I didn't know if maybe we were going to come back up like this. But instead, the floor fell out. We had that final 50% correction. And that was the Goldilocks zone for buying Bitcoin, okay? And you want to make sure you have that in case it happens. The same thing like in March of 2020. If you miss this, you sort of had a second opportunity to buy some. Even though Bitcoin didn't go down to a new all-time low, or local low, I mean, a lot of altcoins did. A lot of altcoins actually put in new lows beyond what they had done in December of 2018. They went lower in March of 2020. Not all of them, but a decent amount of them. And so here we are between the 0.3 to 0.4 wristband. Market still fairly humdrum. You know, you have a lot of bulls, you have a lot of bears. Everyone's very convinced that it's going to go one way or another. I'm here to tell you, no one knows what's going to happen. The only thing we can do is manage our risk and recognize that this market is extremely unpredictable in the short term, and that the only way to really be prepared is to have a good position in Bitcoin in case things pick back up, but also to be stacking cash pretty constantly to take advantage of a situation if we get that capitulation candle. Okay, we have to consider that. If we go back over here, I'm not buying anything else right now, by the way. I'm just buying Bitcoin. This has been my focus primarily for the last 3 months. Well, that within crypto, right? I'm talking about just in crypto. The only thing I'm even considering buying at the moment is Bitcoin until either we get a capitulation or until we hold support above the bull market support band. I know that sounds like a broken record, but look, I mean, neither of these things have happened yet, okay? And these things can take time to play out. Even in 2019, it took a long time to play out. And even we got sort of a pump above the bull market support band, but guess what? It didn't hold it as support. So imagine the FOMO you might feel if something like that happens. Like if it bounces back up here and then it comes back down and then puts in a new low and then finally picks back up. So we need to manage our risk accordingly. And the only way you can do that is if you're hedging, if you're not just 100% allocated in the market. That's the only way you're going to be able to manage your risk, is by recognizing that there is the downside risk that exists. Okay, so going back to the dashboard, you know, the extension from the fair value is approximately 22% now. Okay, so we're sort of still riding that fair value line. If we come below it, that's sort of like the best time to buy crypto. If we end up coming below it and spending any time there, historically it's a great time to buy. In the short term, if it happens, obviously people would feel very upset. But over the macro scale, that would be a more advantageous spot to be picking up crypto. And if we go look at, say, the monthly returns, one of the things we've noted before is that March does not tend to do that well. A lot of these things are just probabilities, right? Like sometimes it works out, sometimes it does not. But, you know, we didn't think September was going to be a good month, and it wasn't, right? We said, look, we're probably going to test the bull market support band in September. And we did. And then in January, we had a red January. And then we said, okay, after a red January, we normally get double-digit gains in February. That happened. And then after that, we usually get a red March. Not always. Last March was green. But a lot of times when you see these nice Februaries, you do get some, negative returns in March. So, with things like the NASDAQ and the S&P continuing to pull back, maybe they can put in some type of local bottom here in the next couple of weeks. I'm going to talk about that at the end of the video as well. Then if the stock market is able to put in some type of a local bottom here in the relatively short-term future, then maybe Bitcoin will sort of get somewhat boring for even longer, right? I mean, and we could just be waiting between 30 and 40K for a while. So just something to consider. And if we go back to the charts, we've also, if I wanted to show this too, that the fear and greed index, if we look at the 90-day moving average, one of the things I've looked at is this a double bottom on the 90-day fear and greed, or is it going to be a series of higher lows or lower highs and lower lows? We don't know yet. Okay, we simply don't know yet. We have bottomed at this level back in May. We also bottomed around this level back in May of 2020 as well. So August of 2021, we bottomed at this level. May of 2020, obviously we went a little bit lower, but we've also had a series before where we were sort of in this range for a while that included a 50% drop. So that's something to keep your eyes on. I'm looking to see, is this gonna curl back up and start trending higher, or are we going to be putting in a series of lower highs and lower lows? So with all of that in mind, sorry, my kids are on the porch playing. With all that in mind, let's talk a little bit again about strategies right now and what you can be doing. So in the last video, I said, the best way to hedge is with stable coins earning interest and picking up some precious metals. Can make a lot of sense. One of the reasons why I mentioned gold, in the last video is because, look, risk-off environment. We've been mentioning gold, by the way, on the Telegram channel for a month or two at this point, and you can actually get exposure through it through crypto if you want, through PaxG. So you can actually get exposure through it through crypto. I'm sure there's a lot of gold bugs watching this that are probably rolling their eyes at the idea of not owning the actual physical asset, but everyone has to do what makes sense for them. And look, I mean, gold, it held its own bull market support band, which is the 21-month SMA, or the 21-month EMA and the 20-month SMA. So it held it as support. When I look at this, the main thing I wonder about is it similar to this, where it's going to go put in another top and then fall below it? Yeah, possibly, right? Possibly. And that's why we need to be careful. And this is why I don't recommend betting the family farm. But there's also a possibility that we're just looking at something like this, right? Where it's just a series of holding the bull market support band over and over and over again, going into some type of a mania phase. So it is just something to consider. I'm not trying to like press it on you too hard or anything like that, but being diversified can help. To give you an idea, like my own portfolio allocation, I'm currently, it's like 35% or something like that. I mean, it fluctuates on a daily basis, but at 35% stable coins and precious metals, most of that is stable coins, right? Most of that is just stable coins earning interest. And I've historically said that my portfolio is less than 5% precious metals. It's actually a little bit more than that now because I picked some up recently. And also because, I mean, it's like the only thing going up right now. And it kind of feels weird to cut the one winner, right? Like to cut the one winning asset class at the moment. It feels kind of weird to trim that one. I mean, maybe you could argue that because it's the one that's going up, I should take it out of that and putting in something else. But I choose to, I want to let the winners ride for a little bit. So I have allowed my precious metal allocation to go above 5%. I think it's okay if it goes up to 10%, given our risk off environment right now. But listen, I mean, if we go back to risk on in a few months, then I could just take what I have, the stable coins, the cash on hand. I could even take some out of precious metals because I'll probably be overweighted there than I want to be, and then put it back into risk on assets. But part of investing is navigating both the risk on phase and the risk off phase, or more bluntly, the bull markets and the bear markets. And as they say, right, there's always a bull market somewhere. Clearly we're not. I mean, when Bitcoin's just in a downtrend for 4 months straight, I don't call that a bull market. I mean, you can call it what you want, but I don't call it a bull market. So we need to consider that being diversified does make a lot of sense. Okay, I have not bought altcoins in 3 months. I've said you should be consolidating some of your altcoin positions if you can. This is not the time for expansion of altcoins. It's the time for consolidation of them into fewer altcoins. So you don't have like 20 different altcoins out there that are all just losing value against Bitcoin. The Bitcoin dominance is still in an uptrend, and this is personally what I want to see, because since I am buying Bitcoin on a weekly basis, then I would prefer to see Bitcoin's dominance go up because I'm not buying altcoins right now. Okay, so what I'm doing reflects what I think is going to happen. So if I'm going to buy anything in the crypto market, I'm going to buy Bitcoin because I think the Bitcoin dominance is going to go up. If I think the Bitcoin dominance is going to go down, and I also think that altcoins are going to do well, then I would start buying altcoins. But right now, Bitcoin dominance is heading higher. Stock market has been heading lower. Precious metals are in an uptrend. What choice do I have, right? I feel like stacking cash and maybe hedging some with precious metals makes sense. So someone asked me, what are you buying, right? Like, I mean, it's a fair question. I think I've been fairly clear The main things I'm buying right now, the main things that I'm doing, so like action points, I still DCA Bitcoin every week, okay, every single week. Um, in addition to Bitcoin, I I am stacking cash. As you guys know, this has been a strategy for 3 months now. I have picked up some precious metals, so I want to be completely open about that. I just made the video on the weekend talking about them more, and also the stock market, right? I mean, like the S&P and stuff. I still am occasionally putting money over there. This is all I'm doing right now. I'm really focusing on cash is one of my main focuses right now. Recently picked up some of this. This is I mean, these are still relatively light compared to what they could be, and the reason they're somewhat light is because we're still at, you know, higher risk bands. I mean, like we're not at the, we're not at the zero point 0.4 to zero point 0.5 risk band for Bitcoin, but we're still at the 0.3 to zero point 0.4 risk band. So if I go super heavy now, then what do I do if we go to the 0.1 risk band or the 0.2 risk band? I need to be able to be somewhat light now. So I am putting some into Bitcoin, but it's not as much as I would as if we were to go to a lower risk band. Okay, so like if Bitcoin were to drop down to say, into the low 30s to the upper 20s, then I would increase what I'm putting into Bitcoin. If it goes down to less than 25k, like 19k to 25k, then I would increase it even more. If it goes less than 0.1 risk, okay, less than 0.1, that is where I get very serious about it, and I put a lot more in. That's the strategy, okay? We need to recognize, some people keep telling me, look, Ben, it's never going to go to 20K. You could be right? You could be right. At the same time, in 2018, when I was buying it at 6K, a lot of people said, hey, it's never going to go to 3K, and then it did, right? In 2014, a lot of people were saying it's never going to go to 200, and then it did, even when it was at 400 for a while. So do away with the thinking that it can't do something, right? It can. It doesn't mean that it has to. There's a big difference between it can do something if the market conditions sort of align and you have like the perfect storm of bad things. It can happen. It's not that it has to. It's that it can happen. And if it can happen, you need to prepare in case it does happen. Okay? So, gold, I mean, right now it is getting pretty heated. I'm not going to lie. I'm kind of in the short term, I wouldn't be surprised to see some type of a pullback. Remember, these bull runs, if it is in one, I mean, they can last for like a decade. So, I mean, like, look at this. Like, if you're sitting here thinking like you missed the boat on it, I mean, the main worry, I think, at the current time is it going to repeat what it did in 2011, 2012 and just kind of do this, bounce out the bull market support band and then come back down? If it does that, right? If it does that and it comes back down, then this is the area to look out for, right? This bull market support band for it, because once it broke that, it was the bad news bears for years to come. But in the short term, you're taking on a risk, right? If you buy it, you're taking on a risk. There's also silver, okay? There's also silver that you should, I think is reasonable. $26. It's been lagging behind Bitcoin a little bit. If you look at the gold silver ratio, one of the things we've noted in the past is that I do think over the next decade, silver is likely to outperform gold. But in the short term, who knows, right? I mean, gold could still come up. This is the gold silver ratio. Perhaps gold does come up, and then later on in the decade, it comes back down, or maybe it'll just go down now. I would say that silver is probably going to be a bit more volatile than gold. But it is something I have in my portfolio. And then the other two precious metals that I have in my portfolio, as you guys know, I mean, I've talked about these forever. I have palladium, which has basically just shot up recently and has actually really surprised me because I have had this position for a while and it was doing very well for a long time. And then in May of 2021, basically it dropped 50%. And then now it's just right back putting in a new all-time high. This is one I have in my portfolio, and then also uranium. I mean, my background, as you guys know, I have a PhD in nuclear engineering. I'm very familiar with the nuclear side of things, and I'm bullish on nuclear energy over the macro scale. Even though I understand some of the short-term concerns with it, it is still, I think, a very viable path forward for us to head down. So. And uranium is also theoretically or arguably holding support on its bull market support band, and it's currently Or here, this is an ETF. This is currently at 24.66. So there's a lot of things, there's a lot of ways you can diversify right now. And the point is, if altcoins are sort of in this downtrend and they're bleeding against Bitcoin and you don't like stacking cash, find where the bull market is. And right now, it's in precious metals, right? I mean, even oil. I mean, I'm not buying oil, but this one has gone up significantly recently. You can see commodities are doing incredibly well. So I'm sort of thinking that oil might get some type of blow off top at some point. I don't know exactly when that's going to happen. One thing to consider is to look at what happened in 2008. Okay. So I want to talk about something here. If we do get this sort of like, V-shaped top for oil, and then it ends up crashing back down. One thing we can do here is we can overlay this, so we can compare this with the S&P. So that's what I'm going to do. And when looking at this, I'm actually going to pin this to a new scale on the left. When looking at this, you can see that during this subsequent buildup by oil, the S&P had already started its downtrend, and then when oil crashed following it, the S&P put in the second half of its downtrend. So here we are. You have oil climbing right now, and the S&P is in a downtrend. At some point, I imagine that oil will come back down. I don't know when, but I mean, I can't imagine that a move like this is going to be sustainable forever. If that happens, then the S&P could still drop with it for another 50% longer than it has before it started its downtrend. And so if that happens, we're still going to be risk off for a little while. Okay, so this is something to consider, and just remind you that, look, I mean, we can look back as much as we want and wish we had done things differently, and obviously the top buy Bitcoin at 64K was I think a bit more obvious than the one at 69K, but this is why you never let a good bubble go to waste, and you take profits here. I didn't really take any here. I did start consolidating some alt positions, a month or two ago, and focusing on stablecoins. So I'm not continuing to buy altcoins during this phase. But I wanted to show this chart because if you actually look at this longer term moving average chart for Bitcoin, one of the things to consider is that anytime we broke below this was sort of the pits of the bear market, right? So anytime we broke below this was the pits of the bear market. That's where we are right now. Okay, so you need to have a plan. If it comes down here, you need to be able to have the cash to take advantage of it. But if it doesn't go down there, complaining about it not coming down here is also not a great strategy either if it doesn't. That's why I'm still just focusing on Bitcoin accumulation until proven otherwise. And if we do get some type of capitulation down here, then I probably would go heavy back into some altcoins in preparation for whatever the next rally will bring us. But right now, I think we just got to sit back and be patient for a little while. The NASDAQ still in a downtrend, nothing too crazy. Something to note is that historically, when we've gotten below this longer term moving average, a lot of times we are able to get back into it the following month. We're below it right now, so we'll see what happens. The last time that we actually closed below it, and then we were in for a longer term pullback was back in 2008. And if this happens, you can see that we had sort of a pullback from October through March over here, October through March. This is really starting from November through potentially March as well, or maybe April, and then perhaps some type. I'm just saying if it repeats, right? And then some type of a bounce here, some consolidation, and then if we get another pullback, this is such a crazy opportunity. I mean, I know people look at these things like it's like the scariest thing in the world, but one of the things I've learned by talking to a lot of people and learning various strategies is the people that did the best in 2008 was not the people that were knee deep in risky assets. It was the people that saw it coming and saw the potential that it could come, and they stacked cash in preparation for it. Those are the people that did the best. Okay, so I'm not saying it has to happen. I'm not just trying to be here to spread all doom and gloom. It does not have to happen. We could just be in some type of a systematic correction like we've seen before, where we'll just get back above it and continue on our merry way. Okay, this is certainly a possibility. You always have to prepare for the worst case scenario, right? Hope for the best, plan for the worst. And if you can do that over the macro scale, then I think you can if you're managing your risk accordingly, you're not necessarily going to see the highest gains, but I think in terms of a risk adjusted portfolio, you'll be able to sleep better at night, right? You'll be able to think like, okay, I like crypto, but I'm not 100% allocated into crypto. Therefore, if it goes down, I'll just be patient, but I have some other assets in the stock market. Maybe that'll trend back up later this year. I have some assets in precious metals. Maybe those will trend up. Have some cash on hand, earning interest. So at the very least, if everything goes down, at least I have some cash that's trying to earn interest just to keep pace with inflation until we get back to a risk-on environment. I think you can sleep a lot better if you are, if you're somewhat diversified. If you're not diversified, harder to sleep if you're constantly wondering what the crypto markets are in fact doing. The dollar, by the way, is still in a fairly strong uptrend. And so there's no reason, in my opinion, to think that we're heading back to risk on until we get some type of resolution here. When you have the dollar rallying from 96 to 99 in a week, things are getting pretty serious. Okay, things are getting pretty serious here. So, look, I mean, if we look at the macro scale on this thing, we've been in this range for a long time. So maybe we come back up here and then we get rejected and we come back down for another retest, and then maybe the floor falls out and we come back down, or maybe it spikes all the way back up to this sort of macro trend line, and from here we then come back down. The dollar's not going to go up forever, right? It's not going to go up forever, but we are at least in a phase where it's going up. And one of the questions which I thought was fair is, well, Ben, why do you stack cash if ultimately cash is just going to basically bleed against Bitcoin over the macro scale? Look, the strategy is not going to be to stack cash for the next year or 2 years or something, right? It's stacking cash for certain periods of time to give ourselves the ability to come in and have more power later on. So that's the goal. It's not to stack cash forever. It's just to say, hey, look, during this very short period of time, it makes sense to stack cash and to hedge with things like precious metals and to just be patient on risk on assets until the market looks a bit clearer. Right now, obviously, we're still risk off. So finally, the future for the website, if you're still watching at this point, is to, again, it's always going to have a crypto focus is the goal, but we're also going to be adding other things like more stuff related to precious metals and some charts there. Again, I don't expect everyone to use everything that we add. There's a lot of people that, don't really care that much for the on-chain stuff, but there's some people who do. So we're going to be adding more stuff to the precious metal side of things, and then we're going to try to build out some of the stock side of things, so that ultimately we'll eventually have sort of like a primary dashboard where you can look at all the different asset classes and kind of recognize what are the risks involved at any given time, and try to figure out how you want to be allocated, and then manage your portfolio accordingly. So those are the long-term goals. And in the short term, we're still focusing on mostly crypto, though, mostly getting crypto stuff out and developing a crypto dashboard. That's like primary objective number one. But I would expect as 2022 goes on, we'll be adding more stuff on precious metals, which I also said, by the way, back in 2020. But the reason that we didn't was because crypto just took off. And it felt silly focusing on precious metals because they just really weren't doing anything for a year and a half. So, all right, guys, I think that'll wrap it up. Thank you guys for tuning in. Leave any comments down below, and I will see you next time. Bye.